The $30 billion Dieselgate scandal that reshaped the auto industry. In 2015, Volkswagen, one of the world's largest automotive manufacturers, was caught in a scandal that would shake the foundation of the automotive industry and cost the company over $30 billion, all from a deliberate attempt to deceive regulators and consumers regarding vehicle emissions. Why should this matter to you? First, the repercussions from this event extended far beyond Volkswagen itself, affecting thousands of jobs, impacting economies, and influencing policies on environmental sustainability worldwide. Understanding how this scandal unfolded not only reveals the lengths to which corporations will go for profit, but also highlights the importance of ethical practices in business. As consumers, investors, and citizens, we are all part of this story. The backdrop to the Dieselgate scandal is rooted in the environmental policies that emerged in the late 20th century. As awareness of climate change grew, countries around the world began tightening regulations to reduce greenhouse gas emissions from vehicles. The U.S. introduced the Clean Air Act in 1970, which laid the groundwork for regulating air pollutants. By the 2000s, there was a push for stricter standards, especially for nitrogen oxides, NOx, a harmful pollutant emitted by diesel engines. Volkswagen aimed to capitalize on this trend, positioning itself as a leader in clean diesel technology. The company heavily marketed its diesel vehicles, claiming they offered a balance of performance, fuel efficiency, and environmental responsibility. Sales soared, particularly in the United States and Europe, where diesel vehicles were considered a greener alternative. However, unbeknownst to consumers, Volkswagen had developed a sophisticated defeat device, a software program to detect when a vehicle was undergoing emissions testing. During these tests, the software would reduce engine power and emissions to comply with regulations. But when cars were on the road, the software would deactivate, allowing the vehicles to emit nitrogen oxides up to 40 times above allowable limits. But how did this ruse go undetected for so long? The answer lies in a complex interplay of regulatory oversight, technological advances, and corporate culture. Various agencies, including the Environmental Protection Agency, EPA, in the United States, and the California Air Resources Board, CARB, relied primarily on testing conducted by manufacturers. This self-regulation created an environment where deception could flourish. Volkswagen's internal culture, which prioritized results above all else, further enabled this covert operation. Employees felt pressured to meet ambitious targets, often at the expense of ethical boundaries. In September 2015, the scandal broke when the EPA issued a notice of violation to Volkswagen. Investigative reports revealed that the company had deliberately manipulated emissions data for over 11 million vehicles worldwide. The backlash was immediate. Shares plummeted, and the firm faced lawsuits from consumers, environmental groups, and government agencies. By the summer of 2020, the total cost of the scandal had reached an astonishing $30 billion, including recalls, lawsuits, fines, and settlements. But the real-world impact of Dieselgate was felt across multiple dimensions. In the United States, Volkswagen's actions led to a loss of consumer trust, not only in the brand, but across the automotive industry. People who had invested in diesel vehicles suddenly found themselves questioning their purchase decisions and the legitimacy of corporate claims. Beyond individual consumers, the scandal significantly impacted jobs in the auto industry, particularly those directly related to diesel technology and emissions compliance. In Germany, where Volkswagen is headquartered, thousands of jobs were put at risk amid declining sales and reputational damage. Moreover, the Dieselgate scandal went beyond the immediate financial repercussions. It ignited a global conversation about automotive emissions, ushering in new regulations and stricter compliance standards. In response to the scandal, many governments accelerated their plans to phase out diesel vehicles and invest in electric alternatives. The European Union, for instance, revised its emissions standards, and countries like the UK and France announced intentions to ban the sale of new diesel and petrol cars by 2040. And this is where it gets interesting. The short-term consequences laid bare the cracks in the regulatory framework supporting emission standards. Critics and experts called for reforms demanding that auto manufacturers be subjected to more stringent oversight when it comes to emissions testing. Volkswagen's deception led to an increased scrutiny of how automotive companies report and manage pollution, prompting widespread investigations into other manufacturers for potential wrongdoing. But it gets even deeper. The scandal had broader implications for environmental policy across the globe. Countries began to reevaluate their commitment to sustainability in light of the revelations that corporations might not always act in good faith. Businesses in various sectors faced greater public scrutiny, emphasizing transparency and accountability. Investors also became more sensitive to environmental, social, and governance (ESG) criteria, signaling a fundamental shift in how companies are valued. Yet, the broader picture reveals a two-sided narrative. While companies like Volkswagen faced intense backlash and financial consequences, the public's perception of diesel as an environmentally friendly fuel was critically damaged. This opened the door for electric vehicles, EVs, to gain market acceptance. Around 2015, the EV market was still in its infancy, but by 2020, global sales of electric cars had increased by 43%, totaling 3.24 million units, according to the International Energy Agency, IEA. This surge in demand indicates a shifting landscape where the consumer is now more inclined towards sustainable alternatives. So what does this mean for you as an individual? If you're a consumer, the Dieselgate scandal is a stark reminder of the importance of being an informed buyer. Question corporate claims, scrutinize reviews, and look for transparency in marketing. Additionally, consider the long-term sustainability of your purchases, whether it's a vehicle, energy, or food. The repercussions of unethical business practices extend beyond a single company and can reshape entire industries. If you are an investor, the scandal underscores the potential risks associated with businesses that prioritize profits over ethical considerations. The fallout from the Dieselgate scandal resulted in significant stock devaluation, causing billions in losses for shareholders. A better understanding of how companies interact with regulatory environments and their commitment to sustainability can provide clarity and direct your investment decisions. Looking ahead, the fallout from Dieselgate will likely continue to influence corporate practices and consumer behaviors. As regulatory frameworks evolve, we might see further investments in electric and hybrid technologies, driving innovation and potentially reshaping the automotive industry landscape. Analysts predict that by 2025, electric vehicles could account for up to 30% of new car sales in some regions, with global cumulative electric vehicle sales surpassing 100 million units. The heightened focus on sustainability and corporate responsibility could push companies to prioritize honesty and environmental stewardship over short-term gains. In conclusion, the Volkswagen Dieselgate scandal serves as a crucial case study in the intersection of corporate ethics, environmental policy, and consumer behavior. The consequences of this event resonated well beyond Volkswagen's balance sheets, prompting a shift in how we think about the automotive industry's relationship with sustainability. Moving forward, we must hold corporations accountable while advocating for ethical practices that benefit society at large. With electric vehicles on the rise, what do you think the future holds for the automotive industry? Will another scandal shake our trust in corporate accountability, or will innovation pave the way for systemic change? If you found this story interesting, hit that like button and subscribe so we can keep making these videos. Tomorrow, we are diving into a story that is just as shocking. Boeing 737 MAX, safety failures, and corporate cover-up. You will not want to miss it. I will see you there.